Hey, my name's James Nicholson, and in this video I want to talk about the interest rates of the Recovery Loan Scheme. Now, this channel is packed with information about the Recovery Loan Scheme. I've done more than 50 videos on that, so while you're here, make sure you subscribe to this channel and go and check out all the videos to get all the answers to your specific questions on the Recovery Loan Scheme. Also, while you're here, do me a favor, smash the like button over there. Come on, just do that right now. Smash that button over there. Make sure it turns blue. That helps me with the YouTube algorithm to get this out to more people and help more people get that funding with the Recovery Loan Scheme. Now, I'm James Nicholson. I've been in business 17 years, had all the ups and downs that you get as a business owner, including the last couple of years, which we've all been through together. And the Recovery Loan Scheme was something that was released to follow on from the Bounce Back Loan Scheme, right? So at the beginning of the pandemic, the government produced two schemes, one called the Bounce Back Loan Scheme, where you could borrow £2,000 to £50,000. And then they had the CBILS scheme, which was for bigger businesses where you could borrow many, many millions. Now that finished last year and it was replaced with something called the Recovery Loan Scheme. Now, bounce back loans were pretty easy to get. Recovery loans are a little bit harder. And the reason for that is that they're not 100% backed by the government. You see, if you didn't pay your bounce back loan back, the bank would still get the money from the government, right? So they would really make it easy to borrow money because of that, right? There was very low risk to them. Now, the Recovery Loan Scheme, that was backed by the government up to 80%. So if you borrowed £100, the government would guarantee that that bank would get back at least £80 should your business not pay that back for any unforeseen circumstances. Now, this year, January 2022, that has dropped to 70%, meaning there's a little bit more risk on that bank's part. So if you borrow every £100 you borrowed, they're going to guarantee that they're going to get back at least 70, right? The government will pay them back at least 70. So these do have some risk for the bank, and because of that, that means their lending criteria is that little bit stricter. Now, that means the interest rates are slightly higher as well. Now, they vary between lenders, but I've been seeing between 6 and 7% is normal, right? And so you can shop around. You don't have to use or get a recovery loan scheme from anybody in particular. You can go to your bank, you can go to a competitor's bank. I would do some research prior and just see which one's got the good rate first and maybe try them first, right? That will change over time. Some of them will do offers. Some new lenders might come in with a better rate to try and beat everybody else. So my suggestion is that you have a look around and see who has got the best rate. Now, also, before you apply, you need to be ready. So you need your accounts up to date with Companies House. You need to make sure that you've got a business plan to be able to show how you're actually going to be able to pay this loan back. But I think the Recovery Loan Scheme is a good scheme. If you need funding or you think you need future funding, it's still cheap lending. You don't get that kind of lending for normal businesses because business lending is high risk, right? So many businesses go bust. And so it's generally a high risk strategy for a bank to loan to businesses. And so because of that, normally interest rates are much, much higher. I think the scheme's good. I think if you potentially need money, you should take it, but you need to spend it on the right stuff. It's not good when I see business owners spending it on all this fancy new equipment that's not going to generate income for them. New vans that aren't going to generate income for them when they could have kept their old vans going a few years longer. What you should be using it for is to grow a business, employ people, market that business, take that business to the next level, right? That's really what the recovery loan schemes are for. And that's what the banks are going to want to see, right? They're not going to want to hear from you saying you're going to buy a load of new computers. They want to see where you're going to take that money and invest it to grow a business. That's an important part of this. So look, any questions you've got on the Recovery Loan Scheme, do pop them in the comments below. We personally reply to every single question on there. And I'm just having a look here, got all my clients' books here. I want to basically give you some help. And so if you really want to get your business back on track now, you need to learn the Business Accelerator methodology. And I've written a book all about that called Expert Mastery. And I want to give you a free copy of this today. A real book we're talking, not an ebook. I will post this out to you. So in the description of the video down there is going to be a link where you can grab a free copy of that today. So do that while you're here. If you didn't earlier, subscribe to this channel, hit the bell, go and check out all the other videos. and I'll see you guys very, very soon. Good luck with getting your recovery loan scheme. Bye for now.